Hey, I wanted to put together a video on some kind of a broad view of the thought process on, how you should be thinking in terms of any kind of trade that you're really putting on. Really kind of falls into a series of steps you have to be constantly going over in your mind. And I guess I just got this from, just over the last few years, just thinking about my own mental process. And I just kind of summarized it as a trading algorithm. And you'll find that even as, right now you're looking at a day trading setup, but I really think this algorithm applies to any trading kind of setup actually. Um, so let me just go over that. So here's our trading algorithm. And the first step in the algorithm is analyzing the market condition, excuse me, and appreciating the market condition. So let's say the market is in a bullish condition, it's a bull market, like this, okay, and the market is kind of doing its wave-like pattern, and it's making higher highs, then coming back and making higher lows, higher highs, higher lows. So this is the market condition. And when you know your whatever the market condition you're in, then you know what kind of setup you're looking for, right? So analyzing the market condition is always the first step. So in terms of oil, we've been in an uptrend since January, and in that uptrend, in an uptrend, you want to be getting in on the retracement to the support level. So this is where support is, and the market's pulling back, and in that pullback, you're getting in here somewhere and trying to manage your risk. So the setup in a uptrend is pull back to support, pull back to support, pull back to support. And that's what we've been doing in oil for since January. And we might continue. All right, so market condition is number one. You're always looking at the market, trying to figure out, is this a neutral market? Is this a bear market? Is this a bull market? Is this a market that is extending or consolidating? And that's something, we'll get into later. You're looking for patterns, double tops, double bottom, bull flags, whatnot. So all that's in market condition. And then on every time frame, like on the daily, on the 4 hour, on the 2 hour, as you're going down and down and down, there's different things you're looking for. And we'll go over some of that today. So the second step is to get the setup. So the setup in an uptrend is retracement to support. So uptrend, retracement to support, retracement to support, retracement to support. All right, and when you recognize that setup, then you're thinking about entry. But before you just hit the button and say go long, you've got to think about risk to reward. That's the big thing people don't talk about. So in other words, when you get to this location, how much do I have to risk to get this uptrend here? How much do I have to get risk to participate in this up move? Then when it pulls back, how much do I have to risk to get this up move? When it pulls back again, how much do I have to risk to get the up move? Okay, so when you get the setup, the next step is risk to reward. So here, let's say if the price were let's say if we're risking $1 here, but this up move is potentially $2, then you're risking $1 to make $2. So that would be a great risk to reward setup, right? And you would take the entry, and if the risk to reward is great, you take the entry. Then you go into a management phase where you're moving your stop along, and you're trying to capture as much of that move as possible. And then you're getting out at some point. Either the market is going to take you out, hit your stop loss, or you're going to just manually exit the trade. And when you exit, you're going back and you're looking at market condition again, trying to look for another entry. All right. Now, if you're at risk to reward, if you have the setup and you're looking at risk to reward and risk to reward isn't good, right? If it's not good, then you wait. You wait, and you wait, and you wait. There's a lot of waiting. So in other words, let's say this pullback, you're risking $3 to get $2. Then that's not a good entry. You have to wait for another pullback until that risk reward is correct. You don't do anything. You just wait, and then boom, you go back up. You follow the market condition again. You wait for the setup, and then you go for you manage your risk to reward. This is a very simple algorithm, but I think as you explore different types of trading, whether it be non-directional or directional, whether it be trend trading or mean reversion trading, it all comes back to this. In any one of those styles of trading, they're looking for a certain market condition and setup to happen. And then risk to reward is measured based on these three. And whether you enter or not is based on risk to reward. So that's all I wanted to say. I think it's a simple video, but a simple concept, but very powerful, especially when you're learning, because when you look at whatever trading you're doing, whatever kind of trading style you're trying to get around, there are certain things you're looking for in this market condition. So, in other words, like as a trend trader, you're looking for where's support, where's resistance, what is the pullback, what tools am I using to measure pullback, what am I using to measure support or resistance. And there are certain things that you'll use here in that day trading strategy that you won't use in, say, a mean reversion strategy or a volatility strategy that's non-directional. And we'll get into those kind of trades, but I think it's important to keep this outline in your head as you're scanning the market and doing your measurements. And even when you're learning, I think it's very good to be cognizant of where you are in the learning process. So for new people, you're really spending a lot of time right here, looking at any market and saying, oh, this is going up, or this is a bearish market, or this is a neutral market. Being able to do that and relate that to support or resistance or a channel, being able to recognize certain patterns, and then going from there. So write this down somewhere, keep it on the side, and just always keep it in the back of your mind. I think it's very helpful. It really helped me get my mind around how to think about trading in general. And then as I approach each trading style, it helps me be more mindful of what phase I'm in the trading. Okay. All right. So that's the end of that, and we will go into a different video.